Assalamualaikum warahmatullahi wabarakatuh. My name is Rahmadani from class F Accounting. Chapter 2 about long-term liabilities accounting principle 2 by Elizabeth A Minbiole. I like to explain the about long-term liability. Long-term liability include have subtopic the notes payable, mortgage payable, debt application, bonds payable, and different income tax. Lead region long-term liabilities. Liabilities are existing obligation or debt until up to 1 year or operating cycle, whichever is longer. They operate on a ballot of after total current liabilities and before owner equity. Example of on paper is our notes payable, mortgage variable obligation under one some criminal less bond payable pension and other post employment benefit obligation, and each very in context is talking about not payable referring obligation to bank or other creditors based on formal written agreement, especially interest rate is usually identified an agreement of following the maximum principle. If interest is owed but has not been paid its mature period to the verification of the financial statements, assume the floor already explained $10,000, 3-year note with an interest of 10% on July 1st. Get action for a piece of equipment, the interest is due and payable. Who answer me on October, January 1st, April 1st, and July 1st? The fund really operated on calendar years based at issue financial settlement at the end of each quarter. A long-term not payable most them record as of July work with insurance accurate at the end of each quarter. In ISO this section with topic we talk about mortgage payable. The long-term finance you use to forecast property is called a mortgage payable. The property is official as a can collector for the mortgage until it is paid of a mortgage. Usually requires equity payment consisting of critical and interest tariff. If some net early payment consists of more interest than principal of the life of the mortgage, the portion of each payment that will shape as principal increase and the interest portion decrease. Mean decrease occur because interest is calculated on the outstanding principal rather the declines or the declines as payment or may end return to the time subtopic all about leaves application. Analysis the property owner gives the right to be used property to the third party in exchange for series of rental payment. The accounting for its obligation is remaining based on the substance this transition, and then we turn to the fourth subtopic. You talk about one payable when short of your available to corporation is long-term bond. Bonds represent an obligation to repay the principal amount of a future date and pay interest usually on a semi-annual basis, unlike notes payable which normally represent an amount owed to one lender. A large number of bonds are normally issued at the same time to different lenders. These lenders, also known as investors, we sell their bond to another investor free or to the limits relief to their maturity. There are some types of bond that are super bonds. Thinking one was convertible bond, irrigation bond. There are bonds secured one and the ventures bond, and the last topic is different income tax. Many companies report different amounts of income on the income statement on their income tax return. This difference currently causes the definition in income tax is not the same under TEA ordinarily accepted accounting principle and federal income tax regulation. CYB accrues income tax expensially calculate on income before tax and income statement where the tax return calculate they do both on tax income for the income tax return if the difference are considered temporary in the world. In other what is certain revenues and or expenses are reported in different year income statement in or income tax return and asset DBT called different income tax decision. If different income tax represents the portion of the income tax expense that will be paid in the future years. A long-term liability called different tax in recorded on paper sheet. And to share all of my explain, I hope this video makes be used for you and